Today we are going to talk about the demand for US corn and soybeans and yet the Chinese tariffs on Brazilian beef. Jerry Gidel is ready to assess all of that and more right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we had a slow week in the markets as usual for this time of the year, unless something significant happens. We just had the news about a strike on Venezuela and uh, the capture of Maduro that will certainly move the oil markets. But getting back to the commodity markets, it was quite a slow market, and I think the market is still watching what's going to happen when it comes to Chinese demand for U.S. corn and soybean.
Exactly right. I think that's still the biggest factor out there. The, Quite an interesting scenario, though, of this capture and return of Maduro to the U.S. I'm not sure how that's going to end up impacting the amount of oil that's out of Venezuela or what might happen with other things. But definitely a interesting set of events happening here uh, overnight. Here in the world politics at this point. Uh, the demand factors have been uh, beat up a little bit by the increased uh, military activity in the Black Sea. Both sides, Ukraine and Russia, are both targeting export facilities and things like that as the U.S. and Ukraine had been trying to get a peace accord, but it looks like that President Putin wants to end up making sure everything's wiped out on the world of export capabilities for Ukraine before he's going to agree to any kind of deal. So I guess that particular situation continues on. Um, if there is going to be some type of agreement in the Black Sea, it looks like it's still not available in the near term from that standpoint. But there has been some interesting things around the world happening here over this last fall period here uh, on things looking at what the final production number in the U.S. might be, what kind of overall demand we might have, and that I think we've likely tightened up some of our carryover stock situations on that accord. But right now, at least, uh, the USDA's reports will be released on January 12th, so that's still a few days away here at this point. But we we'll take a good look at those data as we uh, go forward here because of the fact that last year there was a dynamic change in the corn production number, and I think there still could be a pretty good adjustment in the U.S. Corn yield and final production.
Yeah, so what do you think the adjustment will be?
Well, I kind of feel like that last year he had over a 3.8 bushel decline. I'm looking for a 3.1 bushel decline. And that's really from uh, my trip out to central Iowa, what I saw across northern Illinois, what I saw across Iowa, what I heard from other people in that part of the world along the way, and that even downstate, that the we didn't see any piles on the ground. To me, that's a classic indication of a bigger than expected crop at this point. Now we definitely had a good yield from that standpoint, but I think the same situation is that it. I don't anticipate that particular yield to go up from the 186 bushel yield that the USDA had back in November. And I think that particular yield was really kind of a quick cursory look at it after getting the government back up and going there just a couple weeks before that report. So from there, uh, to some extent, having that 3 bushel decline is going to potentially take down the crops by 280 million, which sounds fantastic. Boy, that's really going to tighten things up. Well, the biggest problem is we had to started out with a record production level uh, at 16 point, excuse me, 16.7 billion bushels. And so, even with this, we've had just a fantastic export year on corn, with the fact that the soybean exports have been curtailed because of China's looking other places in that, and that. Uh, our export production, our export expectation this year is 3.2 billion, and geez, that's 200 and excuse me, 370 million stronger, and definitely have seen that in our quarterly exports at 820, which is 300 million higher than last year from that standpoint. So that's the positive part of what's going on there. The biggest thing is that the other two demands out there, the ethanol demand is keeping up with things at this point, but last year, but it's only up 15 million versus that. And the feed demand, that's a real tricky one. We just recently have had some livestock updates here about numbers and that. But I think the one thing that the feedlot operators were looking at was the inexpensive level of corn and that. So I think they still were uh, showing a very strong quarterly demand for to get it in their position now, possession, I should say. And so I'm looking for a 2.4 billion, which is about 75 million higher than last year, despite the fact that well, we've our feedlot numbers have been in the 98.5 to 99% year over year. Now, the one thing I think is definitely a factor in cattle feeding is that those feed yards out there are very reluctant to be a seller at these kind of prices. Uh, Definitely, some of the Southwest cattle operations in that have been stung by the fact that President Trump decided in the fall that he was going to import some beef from Argentina, which has knocked down the beef price. I think it's knocked it down more in the feed yard area than it has at the retail. I was mentioning to you earlier here that my local ground beef prices are a full dollar higher than they were back in the fall. So, and that really is a major portion of beef is sold as hamburger prices at this point. So, but anyway, I kind of still feel like that there's a little increase there. But interestingly enough, the grain stocks numbers year over year are still about a billion bushels higher than they were uh, a year ago, primarily because we had this production increase out here of uh, year over year. I think we were jumping uh, from about a billion 200 million year over year. So it's definitely a situation where uh, I think the corn demand is still going to be there because at this general level, but at the right now, even with the strong demand in that, we're still going to have plenty of stocks around and that. So that's going to be the interesting thing. We're going to have to look to the South America production areas here on corn to see if there's any kind of issues popping up in there, which will kind of be a big factor here as we
Yeah,
go
so
through.
yeah, it's still on the beef market and the impact on the other commodity uh, clusters. I There was the news that China will impose a quota on Brazilian beef, and anything over that quota will have a tariff. So that is quite significant. I think it's very counterintuitive that a country that would need so much protein would impose a tariff on anyone at this time.
I think I agree with you wholeheartedly that that particular announcement that did pop up here this week from Beijing uh, is one of these things that I don't know how much uh, what how many tons that might impact or things of that nature. To some extent, it probably favors Australia and their beef situations, and that both of the Argentina and well, uh, Argentina is where the beef is coming from currently, and that's grass fed, and I would say that most of Australia's beef is the same thing. So. But the tariff on imported beef is probably going to be impacting both of them. But I would have to say that considering that the cost one way or the other on stuff, I sense that beef prices that's not the primary meat that China's been using for centuries. They are a pork consuming world, primarily because of the lack of pastures and things of that nature. They have always tended to be a pork directed consumer of meats, along with chickens and that. So beef is still at the top of the food chain and probably not going to end up having a huge impact. But it's interesting that they would do something like that. I think it might be as much for show as anything else.
Yeah, so you don't think there will be any impact on the beef prices or the corn and soybean prices?
Um, well, as I said, I don't think that the China is going to be a U.S. Uh, importer, wasn't a big importer, but they've bought some for their high-end restaurants and things like that over the years. But if the majority of the beef that they might use is going to end up being grass-fed stuff, which is isn't what we produce, relatively speaking, in the export market. So it's an interesting approach by China, but I'm not sure how what its impact might be on U.S. Feedlot beef prices at this point. I'm still kind of surprised that the imports into the U.S. here from Argentina have had such a lasting impact as they have at this point. And interestingly enough, we've seen the percentage of U.S. cattle uh, year over year in the feed yards have actually slipped maybe a percent since this announcement back in October, and that percentage wise year over year, which is just another reason why uh, the retail prices here at this point have stayed as strong as they have. Uh, Unfortunately, it hasn't resonated as much at the uh, feedlot prices at this point. So uh, right now, at least, I'd observe it, but I wouldn't get wildly concerned.
Yeah, so with all this combination, what is going, do you think is going to happen in the markets in the first full week of the year?
Well, the first full year, the first full week of trading here, the coming forward, kind of anticipate more of the same choppiness, maybe a little bit of an upward pull as we've got some people deciding to move to the sidelines ahead of that January 12th report at this point. Uh, right now, the soybean data that we're going to be seeing. Also, I'm anticipating a small or the decline in production numbers from what we had back in the fall. Not a huge number, only 55 million, because we really are at a interesting uh, level here. The impact of last summer's diseases have been a lot more impactful in the corn side of things than they were on beans. And that I'm kind of looking for about a 7/10 of a bushel decline in yield, which would be a 52.3. That would be just 3 or 4 tenths of a bushel higher than we've had a couple times here in the last 10 years. And that definitely is, at least I'm not looking for any big jump on the final production number on soybeans. That particular one is tends to have well, at this point I there's been some good yields out there, but I wouldn't say that I've heard as many spectacular yields in some of the previous years, where Illinois was hearing, you were hearing all kinds of numbers in Illinois over 80 bushels and even as high as 90 or 100. Definitely didn't hear that this year, but definitely is a solid year. The impact of the dryness and disease seemed to have come a little too late on the soybean side of things. The one glowing thing that's been going on here has been a huge expansion of the U.S. soybean crush. It's 55 million over last year, and it's 667 million during that setback no period in that, and that's very positive. But the other side of the ledger here is the export side, and that's because of China's decision to source from South America or just kind of utilize their reserves. And this year's fall quarter was only 465 versus last year's 831, or that's 366 million bushels less. And so, unfortunately, our stocks level, even with a very reduced planning this year on things and that, uh, the December 1 stocks are still going to rise 130 million from there. I kind of right now, at least, the soybean market is really still like is probably very dependent on what's going on in South America. It normally is this time of year. What's going on with Argentina and Brazil's production prospects? Brazil's production prospects looks pretty solid at this point. There's been some recent rains. One area that has not been as positive in South America is La Pampas and Rio Grande do Sul. Excuse me, Buenos Aires in Argentina, where the dryness has set in. If it continues, I think that could take some of the excitement out of Argentina's crop. Uh, uh, the twist of it is that because of uh, China being a big buyer of Argentine corn uh, this last year when they were trying to be a tough guy against the U.S., and that's prompted a real enthusiasm about planting more corn in Argentina. And so right now, at least, there's still some optimism about a 60 million metric ton Argentine crop on corn. But if the weather doesn't cooperate here, uh, the soybean crop in Argentina, which is currently projected by the USDA at 48.5 million metric tons, could be brought back down in a big way, particularly with the later season type situations. Because right now, Argentina's plants a lot of second crop soybeans after their wheat crop. Wheat crop's been fabulous this year, and that's what's delayed some of that, and that pushes the soybean growing season into a later period of time down there, which could jeopardize their production. But right now, at least, we probably need to see more dry weather during uh, mid to late January in Argentina for a really big decline in their output. But that might be the sneaky thing that happens here is that Argentina's soybean crop backs off in size and ultimately has an impact on uh, more purchases here in the U.S. There has been indications that China's picked up somewhere between 7 and 8 million metric tons of beans from the U.S. after the agreement here between the U.S. and China back in uh, November, which is a lot higher than anybody expected on our side of the ledger at this point in time. That still leaves, though, a potential for 4 million metric tons of purchases at this point. Right now, uh, China's Premier Xi is doesn't seem to be in much of a fighting mood these days and trying to and that he seems to be going along with stuff at this point. We'll see if that continues. At this point, though, there's not a lot of optimism about what might be happening about new crop 2025-26 on Chinese demand. So that's another unknown as we look out longer term. But right now, South America weather is going to continue to be a very, very important market factor going forward.
All right, so thank you very much.
You
Have a
bet.
great
Have a
week.
good, you bet. Take care. Have a nice holiday week, and we'll be looking at the USDA's numbers even closer next time.
Indeed.